Everybody, this is Jim at SP500chart.com coming to you on April 24th, 2013. It is about 4:30 p.m. here on the East Coast. Before we take a look at the chart, I want to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts, and I will prove that right now. So we're looking at a 30-minute chart of the S&P. I made mention of the fact that yesterday I was somewhat surprised by the ease at which the S&P rallied back above this long-term trend line that broke last week and should have served as resistance this week. But it didn't. Yesterday we jumped up right above this line and stayed above it all day long, and we are still above it today. But the markets really didn't perform very well per se. It's almost as if there's a loss of momentum here, but when we take a closer look at this, I think we might start to see some things that give us a clue what may be happening going forward. And that's always what we want to do with these charts. We want a clue. It's not a certainty. It's never a certainty. We're just looking for clues. So, to begin with, let me just remind you we have an important support line down here at about 1540. As we've looked at the S&P chart over the past few years since I've been doing these videos, we've often seen these areas of horizontal support end up setting up a reversal pattern. So it's like what happens is each time we visit this line, that support is tested just a little bit more. And so far we actually have 3 tests of that support. And it would not surprise me to see a 4th and maybe even a 5th. But eventually, I'm almost certain this line is going to get taken out. And the reason I say that is we have been in this uptrend for more than 5 months, and we're just now really starting to see signs of weakness. Let's go in and look at a 5-minute chart. And here's where we start to, by the way, you know, these 2 long candles right here, what are they? Well, that was when we had the little flash crash that took place yesterday, mini flash crash, and that was based upon the somebody hacking the Associated Press's Twitter account and made the claim, fraudulently I might add, that there had been an explosion at the White House. I'm going to ignore that. Now, it did happen. It is on the chart, but it does not have any basis in fact. So I'm going to ignore that. Now, I'll be honest with you, back when we had the flash crash in 2010? Yeah. Back when we had that flash crash in 2010, and people said, oh, it was just somebody's fat fingers. Hogwash. That was not somebody's fat fingers. That was a market that was due for a quick sell-off. And it did indeed end up doing that. So I discounted that. I never said that was just, well, you could ignore that. No. To begin with, that resulted in a 10% swoon in minutes. And what we saw here was just about a 1% dip, and then it quickly recovered when it was found out that it was just pure hogwash. So I'm going to change the color of these two lines right here. And as we have stated on numerous occasions, when we see a channel develop, it's worth pointing out. It may be something that's only visible on the 5-minute chart, and it may not be anything that's really strongly relevant in the big picture. I'd still like to point them out. So for that reason, I'm pointing out this little line of resistance and what appears to be this little line of support right here. So if this line goes, then we're probably going to come down and check this line out. And if that goes, then we should be coming down and putting more test on that yellow support line that did break, but now we've regained. So it looks like we may be setting up another test of this line, and it would be predicated on the breaking. I'm going to make this orange. I don't know, just no particular reason. So we got this little orange pattern here that's kind of like what we've called in the past. We've called them a typhoon flag. It's where you jump up and then you just kind of go sideways, and often that leads to a short-lived rally. And right now, depending upon where we draw this line, we could be resting right at support. We could have just broken support by a little bit, or we may have a little ways to go. Thankfully, we've got this line. So if this line goes, then we have maybe a little support here at 1574, but I'm thinking the next time we test this line, it's probably going to break, and it's probably going to break in a more convincing fashion. I just think we're due. If we go to an hourly chart, well, let's go to a 2-hour. You can see this rally that has lasted all the way from the middle of November 2012, and now it's starting to get squonky, if that's a word. It's starting to get a bit lack of direction as we go up and down, and we vacillate in pretty much a sideways fashion. And again, that 1540 support line is very important. If that breaks, then we will in all likelihood be coming down to test out the 1490-ish area, 1488, something like that. And then if that were to break, and again, I'm thinking way out of turn here, if that were to break, then we're looking at a trip to the 1380s. All of this is possible. Don't say can't happen. Because if we take a look at this daily chart, you can see that each time we have gotten up to this black line over the past 4 years, each time we've gotten up to this line or we've toyed with trying to get over it, it has set up a reversal pattern. Here's our flash crash back here on in 2010, May of 2010. Or was that late April? I don't remember. I think it might have been late April. And then we had a head and shoulders top here. We had a head and shoulders top here. We had a head and shoulders top here. And now we are in the process of quite possibly making another head and shoulders top. So let's see how that plays out going forward. Guys, I just want to show you one more quick thing. Here's our Dow Jones Transportation Average. You might be able to use this as something of a bellwether. This is giving us a little bit mixed signals right now. This was a long-term trend line that correlates to the line that we were just looking at in the S&P. It has clearly broken, and it has clearly backtested. Now, I want to just always remind you that when we break a line, a trend line, we break for one of two reasons. It either breaks to set up a reversal, or it breaks to set up a continuation pattern, but a sideways consolidation. So I'm looking at this, and I'm seeing two possibilities here, and thankfully we have pretty clear trend lines. This could very well end up being a head and shoulders top. If so, we would have a target of around just a little bit over 5,500 in the transportation average. You can see there was a small head and shoulders up here. It looks like there's a rally today in the transportation average as opposed to the industrials, which sold off. And by the way, here is our same line in the industrials. We have back tested. So it looks like the industrials may be a little bit more setting up your traditional and more typical head and shoulders top, possibly, where the S&P is above this line. In the in the industrials, it is not. It's back tested, and we see weakness today. But if we look at the transportation, again, here's that same line, back tested, came down, now it's coming back again. And the question is this going to be setting up and making a double right shoulder similar to the double left shoulder over here? If this line breaks, then we know to expect a significant sell-off in the Dow Jones Transportation Average. On the other hand, if this line were to break, then we would know to expect a new high in the transportation average. Because if this line breaks, we should be getting up to 64.50, something like that. That would mean this entire pattern, instead of being a head and shoulders reversal, it would turn into a triangle consolidation. Right now, I'm thinking reversal, but still watch this line just the same. So just to quickly recap the S&P, I would look at this line as a sign that this rally that has lasted 4 days is about over. And if it is, then I would watch very carefully this lower yellow line. If it breaks, then we are likely going to be coming back down for yet another test of that 1540 area. And if that breaks, then we know that this is indeed a head and shoulders top, and we would expect a move down to about the high 1480s as a result of the break of this line. And at that point, we would have some other things to consider as well. So guys, there is your video for April 24th, 2013. I want to thank you for watching. I want to thank you for your support, and take care.